Good morning, everybody. Welcome to my channel. It's 8:10 a.m. April 7th. This market is pretty nuts right now. We opened up, gap down on Sunday night. Market recovered a little bit. Now we're kind of moving towards the mid of the session. Tariffs are ripping through this country. Retaliatory tariffs. I think they're supposed to go into effect on April 10th or 11th. This is pretty crazy times. Market has fallen so quick so far, and we're looking at we're already in bear market territory in the Nasdaq, in the Russell. S&P 500, I believe, we'll check into that. I believe is at around the bear market territory, pre-market. It's a pretty insane time. Personally, I've been waiting for some type of correction. I didn't know what the catalyst would be for me to start adding to my portfolio. So, but I know other people, unfortunately, have seen their 401ks really take a nosedive. So that's what's going on. But without further ado, why don't we just get into it? Welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with supply and demand, gamma, exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. That's the way I look at the markets. Okay, I hope to share that with you. Now, I also use market internals. It shows me what's under the hood of the markets. I use that every day, and that sets up everything that I do. All right, so every morning I hope you can join me. All right, give you the story, give you the market news, the economic calendar, leaders and laggards. Just give you the general story of the market. Okay, and also give you a long and short trade scenarios, analyzing the ES and the Nasdaq futures. Okay, we'll do that a little later. Also, daily charts. Go to triple header monster. That's your dollar, your VIX, and your 10-year yield. We'll go over that as well. This is crazy times. VIX right now is almost at 50. That is insane. Okay, so this market has a lot of uncertainty. A lot of uncertainty here. All right. With that being said, smash the like button if you haven't done already. You can wait to the end. That'd be fine with me. And I think we can get right into the watch list here. All right, let's do that. Let's see what is going on here. All right, now we have a VIX is up 9%. We're at a 49.39 VIX. It was up to 50 something earlier. Silver is getting some love today, up 2.57%. Gold's up 0.23. Dollars flat. 10-year yield is slightly down, down 0.20. We're underneath a 4% yield. 30-year bonds, interesting, being sold a little bit today. Dow is down 2.48. ES down 2.79. Crude's down 2.73. Nasdaq's down 3%. Russell's down 3.42. Bitcoin took a dive today or last night. Finally, it was held up on Friday, but it took a dive. So it's down 8.84%, and Ethereum is down 18.11%. 18.11%. That's a big move. Okay. Moving on to the Mag 7 Plus. All right. Let's look at these together. You got Netflix leading the pack, down 1.98%, almost 2%. That's what's leading the pack. We're gonna go into let's go into the 4%. We'll go into the 3%ers. 3%ers. Amazon down 3.22. JP Morgan down 3.33. Broadcom down 3.65. Meta's down 3.71. Apple down 3.84. Eli Lilly down 3.88. Berkshire Hathaway down 4%. Oh, Berkshire Hathaway's finally moving down. AMD down 4.17. Nvidia down 6.116%. Wow. Tesla's down 6.53. Coinbase, the proxy for Bitcoin, is down 8.44%. 8.44%. Anytime I think about, let me just throw a little on Coinbase because it's a proxy, I'm like, oh, it's not gonna. Maybe this is the bottom. Oh boy, maybe. I'm thinking about it, but I don't know. Moving on to the sectors. All right, let's look at what's moving. Everything is down, but the leader is the less involved is utilities. Now, utilities with yields going down become a little more attractive because you can get nice dividends on some utility stocks. Followed by real estate. All right, now everything is down, so we're going to go into the two percenters down. That's communications. That's your Meta, your Google, your Netflix down 2.33. Energy's down 2.45. Energy's been taking a beating. Wow. Discretionary down 2.6, 2.7, moving around on me. That's your Tesla, Amazon, your Home Depot. Financials down 2.81. That's your Berkshire Hathaway, JP Morgan, Goldman Sachs, Morgan Stanley. And there's your technology. That's your Apple, your Microsoft, your Nvidia, your Broadcom. Okay. That's down 3.3%. Semis is the laggard today. That's your Nvidia, your AMD, your Taiwan Semiconductors, your Micron, all those. Okay. Broadcom, of course. Now, that's what you got going on in the sectors. Now we're going to move on to some economic calendar here today and some news. Let's do that. Alrighty. Today we have Fed Kugler speak at 10:30 a.m. Okay, this is for this week. Tomorrow, Fed Daily. So we have some Fed speak this week. API crude. And then on Wednesday, we have crude inventories, Fed Barkin speaking, and FOMC minutes. Thursday, CPI. CPI with more Fed speak. And then PPI on Friday with Michigan consumer sentiment and more Fed speak. That's the week. Okay. Now, as far as news, let's go to that. All right. Trump tariff medicine hammers markets as Europe gropes for response. U.S. President Donald Trump's sweeping tariff plans hammered global financial markets after he warned foreign governments that they would have to pay a lot of money to lift the levies that he called medicine. Hedge funds capitulate. Investors brace for margin calls and market rout. Some hedge funds say they are offloading all or most of their holdings of stocks as U.S. President Donald Trump's trade war wipes out trillions of dollars of market value and forces them to curtail trading using borrowed cash. J.P. Morgan CEO Diamond warns tariffs could slow growth, fuel inflation. China tells U.S. companies it will protect rights of foreign-funded firms. So it says China's Vice Commerce Minister Ling Ji told U.S. companies, including Tesla and GE Healthcare, that the country would always protect the rights of foreign-funded firms in China, including those from the United States. Apple appealing against UK backdoor order, tribunal confirms. All right. So we'll just read this real quick. Donald Trump's broad tariff measures shook global financial markets, causing U.S. stock index futures to slump further as investors flocked to government bonds amid economic concerns. U.S. Treasury yields fell further with the two-year yield reaching a multi-year low. European stocks sank to 16th-month low as fears of recession took hold. In Asia, Japan's Nikkei fell to its lowest point in 1.5 years, dragged down by a sharp decline in bank shares, with Chinese and Hong Kong markets also plummeted. Taiwan experienced its largest one-day drop on record. Meanwhile, investors turned to buying the euro, yen, and Swiss franc. Gold prices stabilized, supported by strong central bank demand and expectations of Fed rate cuts. Oil prices continued to slide as escalating trade tensions fueled recession fears. Later this week, U.S. consumer prices are projected to rise by 0.3 from March, adding further pressure on corporate profit margins as the earnings seasons begin. All right. Let's see if there's anything else here. Looks like Meta, the company, on Saturday released the latest version of its large language model, Llama, called the Llama 4 Scout and Llama 4 Maverick. Meta said in a statement that the Llama 4 Scout and Llama 4 Maverick are its most advanced models yet. All right. Let's see else in the news. Toyota, the Japanese car maker, aims to have about 15 electric vehicle models developed on its own by 2027 and is targeting production of about 1 million cars by then, the Nikkei newspaper said on Sunday. Walmart, the retailer, on Friday denied a report from ABC News that it was considering joining a group of investors to buy short video app TikTok. All right. Okay, looks like Apple got a price target cut from 325 to 250. Meta got a price target cut from 725 to 600. Microsoft got a price target cut from 500 to 475. Tesla got a price target cut from 550 to 315. Walmart got a price target cut from 110 to 195. Alrighty. The juice really just says what I've been saying. All right. So I mean, and basically what this is going to cause, I just saw another thing here. Let's just look at one other thing here. Give me 1 second. I'm going to pull this up. What I just saw, because this is really what it comes down to. It comes down to earnings. All right, here we go. This is what I wanted to show you guys. All right, right here. So this is at 7:12 a.m. It's U.S. stock index pair of losses. S&P 500 mini futures down 1.6. All right. It says tariffs could cut 2025 S&P 500 earnings by 10%. Bank of America. 10%. Okay. The market needs to price that in. All right. But there's so much uncertainty about these tariffs. So very interesting, right? Very, very interesting. I think we could move on. All right. We'll move on to daily charts. All right. Here we go. Some dailies. This market's been falling like insanity. It's fallen like an anchor. It's just been crazy. Okay. Let's look at these daily charts together. Okay, so Friday. Okay, so Friday we closed. Well, I'm sorry. Thursday we closed below the anchor view off of 2024. And then Friday, big gap, big drop down all the way to 505, right? 505 pretty much was this swing low that I talked about and breached it a little bit. Next place to go would be 494, okay? And you have a trend line here. Currently, we are at 491.50. We are right here, right at this trend line, okay? If you look across, this is basically support and support. That could be a logical place to possibly bounce. Okay, that could be a logical place to possibly bounce. Okay. Now, all right. So sorry about that. Um, let's get back to what I'm saying. This support right there could be a logical bounce point. All right. The next support would be around 467, 466. Okay. But I think possibly, the thing can't sell off forever. You get a bounce here. Possibly. I don't know for sure. Let's look at futures. Okay. You can just see futures just boom, boom. We gapped down in the Sunday night. And now look. We went up. We made a recovery. Went all the way down to 48.32. Okay. All the way down there. You got some buying. Now we're kind of working it off. We went all the way up here, and now we're kind of hanging out here. Okay. Let's look at the Qs. All right, so the Qs. The Qs is definitely in bad shape. Definitely in bad shape. You can see we came right down to this support right here. Look at that swing low. 423.62. We pretty much came down to that support, okay, on Friday. Okay, the next major support level is 412. Okay, 412. That is where we are now. We're right below it. We're in this area. We're right here at 410.75. Okay, around here. Right there. So we're right around this support, the swing low, and this resistance. Okay, that's what I'm saying. This could be a possible little mini bounce point. We just came a ton off. Okay, now if we're going to talk about percentage wise, right? Let's go back to the SPY. Let me just move this time axis so I can get a proper. Okay, so we're right now at 490. Oh, it's kind of moving up a little bit. So 492. So if we just go to 492, right here to the all-time highs, that is 24.25%. Right now, that's where we are. That puts us in bear market territory. That's 24.25% of a decline from all-time highs. That is crazy. Okay. Now the Nasdaq is worse. Let's go look at the Nasdaq. Okay. Nasdaq is at currently 410, almost 411. It's kind of pushing up right now. So let's just look at that one. 411, right? 411. Let's get an accurate. Let's just do it from here. That is 30.92%. Oh my god. Oh my god. Almost 31% decline right now where we're at in the Qs. 30%. That is massive in a short amount of time. Okay. So that's what we're dealing with here. All right. Let's go back here. I'm going to change this back. All right. So that's what we're dealing with here. Let's look at futures. This looks like we're pushing up right now. Yeah, see, we're pushing up. You came all the way down here to 164.60. Right, you got buying excess now. You finally got some buying excess. Okay, there's last week's lows, and you can see the gap we have. So today, do we bounce? Maybe, highly likely. I don't know how far, but we've came so far. It's pretty crazy. Okay, now we're gonna look at the bond market. A triple-headed monster right now, because that has been dropping significantly. Okay, so we came down on Friday all the way down here to 3.8 yield, and then you kind of closed with buying on Friday. Then we opened actually here, right? Came all the way down again and then getting bought. Now, obviously, bonds are a little overbought because this is the inverse overbought. Okay. Remember, I said this poor structure came right down and cleaned up the poor structure, which I thought that would happen. Okay. Let's move on to your dollar. Okay. Here's your dollar. Your dollar kind of bottomed out too. Two candles here and it's pushing up. Remember the poor structure here I talked about? It took that out. Okay. It's not a surprise. Now we finish off with the VIX. And look at that VIX. Okay, so look what happened. We opened up on Sunday at a 60 VIX. 60. And now we're here. 49. Still a monster VIX, but that is, we came from a 60 down to right now a 49. This is pretty crazy volatility. Okay. That's what we're talking about. All right, now we can move on and we could talk about the market profile, volume profile here. Oh, one other thing. Let's just take a quick shot of the breath of what I like to look at. Let me go to my trusty one indicator here. So, this is something I like to look at. This is pretty crazy. So, this would have been what date? Wednesday. This is crazy. Wednesday, 63% of stocks in the S&P 500 were above their 20-day moving average. 63. We ended the day on Friday, 5% of stocks above the 20 simple moving average. That is crazy. You went from 63 to 5% in 2 days. All right? And we're lower right now. So it is insane. That's one thing, okay? Let's look at the bullish percent index here of the S&P. That is pretty low number. You can look to the left here. That's a 23. That means 23% of the S&P 500 stocks on point and figure charts are buy signals. 23%. That is obviously not bullish. Okay. And new highs, new lows. Let's just check out that. Give me a sec here. New highs minus lows. Wow. That is crazy. All right. So readings before were almost in parity up here. Just as many stocks making new 52-week lows as highs, right? Check this out. This reading is minus 1027, and look where this comes to be equal with. This is September of 2022, June 2022, and May 2022. Those are pretty negative readings. I guess I'd probably have to go back to COVID. I don't think I can go back more than that. But that is pretty crazy. Okay? All right, just wanted to give you some breath. All right, updates. Now we'll go to the market profile, volume profile, and we'll come up with some game plan here. Okay? So, this is where price is right now. Let's get the marker out. All right, let me just exit this and read. Oh, I guess it's working. Okay. I mean, let's look real quickly what happened on Friday. Pretty much. You know what? Give me 1 second. I'm gonna. This thing is acting weird. I'm gonna exit it and reopen it. It's just not working normally. It's just acting weird. Give me 1 second. It should pull up any second. Here we go. All right. So we opened here, had a little buy, and then we just kind of like worked ourselves way down, right? Close at the lows, pretty bearish close. Okay. Pretty bearish close. That's what happened on Friday. Now, real quick, give you another breath look. All right. So if we look at the internals, just super bearish on Friday. Okay. You have 12 to 1 volume going into selling down stocks as opposed to up stocks. In the NYSE, 6 to 1 in the NASDAQ exchange. Your NYSE ADD was negative 2,300. The NASDAQ was 3,018. That is crazy. S&P 500, out of 500 stocks, 475 were declining. The NASDAQ 100, 97 out of 100 were declining. That is super bearish. You could see all the bloody red up here. Okay. That is super bearish. Okay. Now, levels to look at. Levels to look at. Okay. Now, this is where we bottomed out at down here, right? There's a big demand zone here. Okay. It's pretty balanced, the session. All right. What we want to look at is here's you got a gap. So our gap fill is 50.8875. That is the lows from last week. Okay. Now this might be a little. Let me try to think of that. Don't worry about that. All right. There's our gap fill. Okay. And we have a big demand zone here with the most traded price of the overnight here. We have the midpoint of Friday session, 52.01. Okay. So what do we do? What do we do today? Do we really go lower and break these lows? I think we're at significant support areas in the SPY and the Qs, right? I think we established that, but anything can happen. Okay, but we just gap down, gap down, gap down, and came. I mean, the NASDAQ is 30% from the highs. Wow, that is something. That is really something. All right, why don't we just get right into. Oh, by the way, this is our market profile, volume profile. How we just look at structure. Okay. And we're going to get right into scenarios here. Let's look at it. Let's look at it. So pretty simple. Be very patient here. So in this big, this is really big, but this is the lows from the overnight, right? All I care about is what do we do down here? So we could either come up, fail to fill the gap, or fill the gap, kind of pull back, and you got this demand zone. And this demand zone happens to have the most traded price of the overnight. Let's call it 49.30. 49.30. This could definitely try to hold the market, make some higher lows, and fill the gap. Then there's the most traded price of Friday right here. That is around 51.05. If you can clear this, you could try to make your way to the midpoint of Friday session. Okay. Also, we could possibly see a little bear trap here. We can come down, come through, tag the overnight lows, get short stuck here, rip up, and see if we can move up. Okay, that's what I'm looking on the long side. As far as the short side goes, okay, price is right here. Okay, we got our gap fill. So, in this little scenario here, we do have a balanced session. So, if we come up and try to fill that gap and fail, lower high, go through the open, we could start to make our way down to this most traded price of the overnight. You do have demand here. I don't think this is going to be easy to cut through. Okay, I don't think it's going to be simple. But if we work our way down and break these overnight lows, we could possibly get further downside. Okay. We could also, let's say, come up into here, fill that gap, and then tag the most traded price of Friday, try to go higher, fail, and then maybe we work our way back to somewhere in here. Okay. That is the short and the long scenarios for the ES. Okay. Now we're going to go and look at the NASDAQ. Probably going to be similar. Okay, so we have our gap down. We're at the top of the session. It's pretty much a carbon copy So I don't even need to talk about, it's just carbon copy structure. So we're going to go with the 50% retracement of Friday, 178.46. Gap fill 174.43. Right? Very balanced profile as well. And we have this demand zone from the overnight lows. And we have the most traded price, 167.71, right here. That's all we need to pay attention to. All right, so let's talk about the scenarios here. That would be, we'll start out with the bull case. Not that they're in control, but right. I would think today might be the day we get a bounce. All right, and it could make us look like a bear trap to do it. So, like I said, we could come up, push up, either fail to fill the gap or fill the gap, and then sellers might come involved. Now, you can get support in this demand zone and the most traded price of the overnight right here. Right here, higher low, higher low. Then you come up, fill the gap, and try to make your way to the most traded price of Friday. Maybe go into the supply. Okay, now if you talk about a bear trap, we come down, fail to fill the gap, come push through here, break that overnight lows, get everybody thinking we're going to go lower, rip up, higher low, and maybe we go up and fill that gap. That's really what I'm looking at as far as longs. Short side. Okay. Our price is right here on the short side. If we come up and fill that gap, that could roll over, come through here. Like I said, I don't think this would be easy. And maybe if we break this demand, we could go lower, possibly to this next demand zone. Okay, possibly to the next demand zone. Of course, we could just start working our way down, right? And maybe that's the move, right? Now, we also, one more, fill that gap, come all the way up to the midpoint of Friday and the most traded price, and maybe we fail here and just come down a little bit, right? I wouldn't be that crazy about shorts in down here. More up here in the gap fill, just because we've been so short, right? That's why I'm saying I think a bounce might be coming today. I don't know how big it will be, but I don't know. Maybe we just take out the lows again. I really don't know. But however, that is our scenarios for today. Okay. Hopefully you enjoyed that. All right. Please smash that like button for me if you did enjoy that analysis. Okay. Now, of course, I do this every morning. You can come join me. I give you the market story, the lowdown, the leaders and the laggards, the market news, the economic calendar, and of course, I just gave you the long and short trade scenarios on the NASDAQ and the ES futures. Okay. We have a plan. Okay. Today, I'm probably again going to be more concentrating on SPX 0 DTE. All right. And for me personally, I like to do credit spreads or broken wing butterflies. We don't have to get into what all that is. I might do them for a credit as well. I can control my risk, and the gamma is so high right now that you get nice moves, and I still could control my risk. All right. Futures, the futures might be, the ATR might be crazy again, 25, 26. It's very hard to gauge risk. You can't use a lot of contracts, so I think my preference is the SPX 0 GTEs. Okay. That's what I plan to do today. All right. So, everybody have a great day. Remember, no trades to trade. Stay green. And I'll see everybody tomorrow. Be patient today. It's Monday, all right? Take it easy.